Welcome back. Hope you're having a good morning. Well, let's get straight to some fundamental analysis on all the stocks we just discussed. Dipan Mehta, Director at Elixir Equities, joins us on the show. Hi, Dipan. Good morning and good to see you. Let's talk about Swiggy. The stock at around 600, maybe it extended itself on the upside. But at around 418, are you interested going by these numbers, which had some kind of positive, cues that we got from there? What's your take?
Good morning, Nigel, and thank you for having me on your show. I think the discount that Swiggy has over Zomato still pretty much remains over there. And these are one of the few growth avenues within the entire consumption space. So either you have Zomato or you have Swiggy. As a measure of disclosure, we are invested in Zomato. So I think even at these levels, if you have a long-term view, 5-10-year type of a view, these companies are going to grow exponentially from these levels, and they could turn out to be great multi-baggers and give compounding returns as well. I think corrections like this, you can take advantage and get into Swiggy. Why Swiggy over Zomato? Because it's just trading at a mild discount over Swiggy or Zomato. That's the reason. But I think the internals of the company look on path, and the growth remains pretty much intact. It's only a matter of time before it starts going into solid profit.
Okay. So you're retaining the faith on Swiggy. Got that. Dipan, hi. Good morning. Now, the pain stocks, they've been falling, quite badly for very obvious reasons. We had, Nerolac also come out with a very sluggish performance. There's hardly any growth. There's some 50 basis points pressure on the margin. Would you buy these stocks now when the business is struggling? Or do you think that, no, it's too early maybe to look at an upcycle again?
Yeah. Good morning, Swiggy. I think paints, good morning, Swiggy. I think paints ones need to avoid completely at this point of time. I think we have not seen the kind of a slowdown in the paint industry for a long, long time. Coupled with that, we have competition really building up over there. Just too many uncertainties. And I think given the kind of industry profile, it's just best to stay away from paints. Very tough question to answer is whether to keep holding these stocks or to exit. And I would say that every rise in any paint company is a good opportunity to exit out of the paint industry.
More questions coming your way, but let's just sort of tie in that consumer bit off. Dipan, lots of numbers today, and we'll see numbers from ITC, Britannia. So let's get Mangalam back in to talk to us about what the markets are really watching out for from these two. Mangalam, morning again.
Good morning. So, let's talk about Britannia first. There has been weak urban demand, gradual recovery seen in rural, etc. But what will hit them most this time is the sharp inflation that we've seen in palm oil prices. And as a result of which, even though the revenue growth expectations are at around 6% the EBITDA falls by about 5% and margins compress by about 200 basis points as well. And on the back of that, we are expecting a 4% decline in the net profit of the company, with the domestic volume growth assumed between 4 to 5% itself. About 1% comes in from price hikes as well as product mix too. The most important thing here would be the management commentary on some of their new product launches, but most importantly on raw material inflation itself. For ITC, the good part was that there was no change in tobacco taxation in the budget this time around. The company went ex-hotel business with effect from the 1st of January. So this time around, they will report their hotel business in the consolidated, rather standalone numbers as well. Just keep an eye out on any sort of one-off expenses which may accrue on account of the demerger itself. The most important number to watch out for ITC is the number that they don't reveal. That's the cigarette volume growth. But analysts assume that this number this time around could be around 3 to 4%. 5 to 7% growth in the FMCG business. Hotels, because of seasonality, grows between 12 to 15%, with faster growth coming in their operational performance. Agri revenues grow 15 to 20%. Sluggish performance in the paper business. All of that put together means overall revenues grow just shy of double digits, 9.5%. This is the ex-excise. EBITDA grows at around 3%. Margins hold steady at around 34.5%. And the net profit comes in at around 5,135 crores. Optically, the net profit for ITC would be lower, largely because of a 470 crore tax reversal in the base quarter.
All right. Those are expectations coming in. Britannia and ITC. Mangalam, thanks for that. Coming back to you, because we've got Trent coming up as well. But let's just ask Dipan if he's got any interest in these two, ITC, Britannia. Dipan?
No, not really, Prashant. I think for us, entire FMCG pact is a complete avoid. And I think these levels also one could look at switching out of FMCG. A lot of products have reached maturity, and these kind of growth rates, 2-3% volume growth rates, they really cannot create wealth from an investor's perspective. I was just checking, in the case of ITC, its 10-year sales growth has been 7.22%. That's about it. and profit growth also around the same level. So with these kind of long-term growth rates, you cannot really expect the stock to outperform, and the base effect keeps growing for both these companies, so it's going to get even more challenging going forward.
All right, fair enough. Trent is the other one, right? Last quarter was pretty consequential because growth rates were not 45%, they were just under 40%. Stocks saw a big move on their results day. I'm talking about Q2. Back to Mangalam with what are expectations now? Mangalam.
Well, for Trent, Dipan's alluded to mid-single-digit, low-single-digit sort of volume growth for companies in the staples. Trent has been reporting very high growth, but, valuations ran up ahead of the company as well. So, the valuations for the company peaked out in the previous quarter. The stock has corrected about 31% from highs, but still trading at around 81 times two-year forward earnings. This time around, the revenue expectations have been moderated from 50% to about 35%. There is mild compression expected in EBITDA, largely steady around that 17.9, 18% mark itself. The net profit for the company grows at 40% as per analyst expectations. There is moderation in revenue expected. Revenues would be led by Zudio. But this time around, even if the company does go ahead and beat street expectations, moderate expectations of the street, the question is whether the stock gains its past glory, largely because between last quarter to now, competition has, spiked as well. We have U-Star from Reliance, you have Intune from Shoppers Stop, Aditya Birla Fashion, and a lot of others have amped up their value fashion portfolio as well. So with all of this, is the runway for Zudio ahead, still ahead or not, is the big question. And as a result of which, we'll watch out for Trent. Will be one of the most interesting result reactions to track today.
Oh, absolutely. Mangalam, thanks very much for that. Dipan, what do you say? Is the best over for Trent, given the dream rise? Or is this just a pause and you think they'll prevail come what may, despite all the competition that Mangalam alluded to?
Yes, I'm not worried about the competition as much that, a company which has a physical business just cannot keep on growing at those growth rates. At some point of time, the same store sales growth, the number of new stores is going to slow down. But look, the stock is priced to perfection at about 150 times trailing 12-month. And although it's corrected by about 30% or so from its top, I don't feel inclined to buy it. But selling it is a very tough decision because you're still sitting on a lot of profit and there's still a lot of underlying growth. So I think you just kind of remain pretty much invested and, hope for better results going forward and hope that the P multiple remains at around these levels, because then at least whatever growth rates are there in the earnings per share, that will be matching the expected returns going forward also. Where the P multiple starts to compress, as we have seen in a company like DMart, which is also similar kind of a line of business, then you could have a long period of underperformance.
All right, Dipan, there were a lot of numbers that came out from the broader market. Stocks like Reddington, the numbers look quite good out there after a while. Sagility as well, the numbers look good. Wellspun Corp was another one. Avalon Tech. Any of these numbers that came on your radar, any of them, are looking good from here on? Because all of these stocks have corrected a little bit from the top.
Nigel, haven't really looked at these three numbers, but I thought TVS Motors came with a very good set of numbers, and we're getting, I would say, quite positive on the two-wheeler space. I thought Aisha's monthly figures also are very impressive, and the same is the case with M&M as well. So what earlier the impression was that automobile industry is slowing down, and it did so for a couple of quarters, but I think we are seeing again a mild reversal taking place over there. And this reduction in the tax, which will be paid, exemption up to 12 lakh rupees, that can certainly be a booster for big ticket consumption items like automobiles. So I think that entire pack where investors were quite, including us, were quite negative, and there were fears of volume slowdown and discounting. I think we are seeing the end of that particular phase, maybe a few months from now.
All right. Dipan, the one space which was a standout performer yesterday was capital market plays. We've discussed this earlier. The Nifty Capital Market Index was itself up some 4.5%. So you had brokers like Angel, which did one, RTAs like CAMS, etc., which were shooting higher. Nippon was up 10% from the AMC pack, and so on and so forth. What's the view here, Dipan? I mean, generally the fear has been if markets go sideways, P's will derate. Stocks, many of these stocks have already come up 10, 15%, 15% on average from the lows. Anything you like here?
No, Prashant. I think that further correction can be expected in their entire capital market, financial services space, be it wealth managers or asset management companies, stockbrokers, even depository like CDSL, because these are cyclical businesses, and their present valuation does not reflect the cyclicality of these businesses Also, eventually, new account openings, new IPOs, new NFOs from mutual funds is going to slow down. The base effect also is fast catching up for the industry as a whole. So I'm not that positive, although it's a great space to be in over like 5, 10 longer term period because of financialization of savings. But you need to buy them when the markets are really corrected and the volume of business is at a cyclical low. Only then you can expect to make good returns. And I don't think we have reached over there. Valuations, I think, are still pretty much quite rich.
There was this name, I don't know if you've seen, it's the smallest of the solar plays. Vari is the biggest. There's Premier, and Acme Solar is a small company, but there was a Kotak institutional equities initiation note. Stock ended 10% higher. Anything you like in this space, Dipan?
Yeah, I think we like the entire solar equipment manufacturing space, as is also with the wind energy. We saw what happened with Suzlon and Inox. But when it comes to solar, I would still like to go with the largest player, that being Vari Energies. Exceptionally good set of numbers. Valuations are reasonable. Stock has corrected from its peak significantly, and a very strong order book position provides earnings visibility as well. You could also look at Tata Power. I thought the numbers, especially on the renewable business side, were quite impressive. I think it's a kind of a safe stock in terms of the other businesses. They give a lot of visibility to the earnings for Tata Power and stability as well. So these are the two stocks which come to mind. But I think across the board, whether it's Acme or whether it is Premier Energies, these are all great stocks to remain invested in. It's just that at corrections, I think it may make more sense to buy them. But one has to have a slightly longer term view. And there's just one issue over here, that being what Trump decides and what US decides on renewables. And that really is a kind of a threat, as also is the lower Chinese prices because of intense competition. But nonetheless, I think the prospects are great for entire solar equipment manufacturing companies.
Okay, well, absolutely. Domestic demand remains very, very strong. So that's the tailwind here. Dipan, stay with us. We're going to come back with more questions, but we'll take a break here. The SBI is starting about 1.5% lower. That's, of course, the pre-open session. Dipan is still with us. Dipan, SBI or any other financials ahead of the RBI tomorrow?
No, I think pretty good numbers can be expected from SBI, and it is fast narrowing the gap with the private sector banks as well, and still valuations are attractive. I think anybody wanting to increase exposure to banks, which they should, because almost 30% weightage of the benchmarks is from banks and BFCs. I think the PSU banks is a good segment within the banking industry to kind of increase exposure if you don't have adequate exposure to banks.
Dipan, are you a wine drinker? Not in the mornings.
Not really. I saw that Sula Wines is coming on your show. That is one company which has kind of disappointed. I don't think it's operating at its full
So tell us, we have the management joining us in just a bit, right? What is the one thing you want asked? We'll ask them.
I think that as a category in the entire alcohol sector, wines should have the highest growth category, but somehow the numbers always fall short in terms of volume and top line growth. So I just feel that it's got as a story, as a segment, as a business, it's fantastic. But why don't the numbers come through?
Let's start right there, Dipan. Let's start right there, because that's exactly what was crossing my mind, not just looking at the third quarter, looking at overall the performance this year. Rajiv Samant is already there. I think he can hear all the tough questions coming his way. Rajiv, morning. Before we get started, for the benefit of viewers, let's put the numbers up. Good morning.